All right, so today we're diving deep into Steel Strips Wheels Ltd.
Ooh, interesting.
Yeah, it's an Indian company, and as you can probably guess, they specialize in wheels.
Makes sense.
Yeah, and we've got a really interesting mix of sources for this one. We've got a resignation letter, some financial reports, company announcements, and even some auditor reports. Kind of a lot to sift through.
Yeah, real treasure trove.
Yeah, but basically, our mission today is to figure out, is this company worth investing in?
The million-dollar question.
Exactly. So we're going to put on our detective hats, dig through these documents, and see what we can find.
I love it. A financial mystery.
Right. And trust me, there are some juicy details buried in these reports. But first off, something that caught my eye was a recent leadership change.
Oh,
Yeah, they've got a new compliance officer. The previous one, Manohar Lal Jain, he stepped down
okay.
to focus more on his role as executive director.
Interesting. So the same person was both the compliance officer and executive director.
It seems that way, and that in itself is a little strange.
Yeah, you don't see that very often. Makes
Yeah.
you wonder about potential conflicts of interest.
Exactly. And his resignation letter, it adds another layer of intrigue. He expresses gratitude for the quote-unquote unstinted support he received. But it almost sounds like he's relieved to be free from the pressures of that compliance role.
Like he dodged a bullet.
Yeah, kinda. It makes you wonder what was so demanding about that position.
Definitely raises some questions. Yeah.
And his replacement, Kanika Sapra, she was actually appointed back in October 2024. So she's had a few months to prepare.
Smart move. A smooth transition.
Yeah. But it also makes you wonder, what's she walking into? What kind of challenges is she inheriting?
The plot thickens.
I know, right? But okay, before we get too lost in the drama, let's shift gears and talk about the company's financial performance. Because after all, we're trying to figure out if this is a good investment or not.
Absolutely. The numbers are key.
Right. And, based on their announcements, they seem to be doing pretty well. They're saying they're on track for their highest ever alloy wheel volumes.
Impressive.
Yeah. Plus, they've started mass production of aluminum knuckles.
Which are?
They're key components for car suspension, so, essential parts.
Gotcha.
And they're even proudly stating that their EBITDA per wheel is among the best they've seen, like historically.
Oh, interesting. So they're really focusing on that efficiency, squeezing every bit of profit out of each reel they produce.
It seems that way. And, the overall numbers are pretty impressive too. Over the last 9 months, their total income went over 3,200 crores, which is, get this, over 385 million US dollars.
Wow, that's significant.
Yeah, and just in Q3 alone, they brought in 1,077 crores. So business seems good, right?
On the surface, yeah. But revenue is only part of the story. We got to dig into the profitability to get the full picture.
Okay, yeah, you're right. And this is where things get a little more complicated. Because while their overall EBITDA margin is, pretty healthy, sitting at 11.3% over those 9 months, their profit after tax, or PT, for Q3 is actually down 13% compared to last year.
Uh-oh. A red flag.
Well, we got to figure that out, right? The company, they're attributing this to the, and I'm quoting here, full favorable impact of switching to a new tax regime last year.
So a one-time tax benefit that's gone now.
Yeah, basically. They also pointed out that their profit before tax, the PBT, in Q3 this year is also lower by 15% year on year.
So even before taxes, their profits are shrinking.
Right, and that's what we need to investigate, right? Is it just the tax situation, or are there other factors at play? Are their costs going up? Is competition squeezing their margins?
Good questions. We need to dig deeper.
Yeah, and here's another interesting tidbit. In their announcements, they mentioned that they expect exports to pick up pace in Q4 due to a, quote, favorable geopolitical situation.
Okay, that's awfully vague. What are they talking about? Is it a war, a trade deal, shifting alliances?
Right. It's like they're hinting at some secret advantage, but they're not giving us any specifics.
Makes you wonder, doesn't it?
For sure. So we'll have to investigate that further. But for now, let's turn our attention to those auditor reports. Maybe they can give us some more insights into all of this.
I agree. Let's see what the auditors have to say.
Okay, so right off the bat, I noticed something interesting. The reports, they mentioned providing moderate assurance regarding the financial statements.
Moderate assurance. Now, that's a specific term, right? It's not quite a full audit.
Yeah, I was wondering about that. Can you explain the difference?
Sure. So a full audit is like a deep dive into a company's financial records. Everything gets scrutinized, transactions, assets, liabilities, accounting practices, the whole shebang.
Okay, thorough.
Vary. But a review, like what they did here, is less extensive. It's more like a spot check.
Yeah.
They'll talk to management, do some analysis, look for any obvious red flags, but it's not as comprehensive as a full audit.
Gotcha. So we should keep in mind that the auditors haven't necessarily looked at every single detail.
Right. It's more of a high-level check to make sure the numbers generally make sense.
Okay, good to know. Now, here's another interesting bit. The consolidated financial results, they include an associate company called CleanMax Astria Private Limited.
Associate company meaning.
It means Steel Strips Wheels has some influence over them, but not necessarily full control. So their performance can impact the overall results of the group.
Got it.
But here's the thing. The auditors didn't review CleanMax Astria's financial information.
Now that's a potential issue.
Right.
Right.
We're relying solely on their management to present their financials accurately. It's a bit of a blind spot.
Yeah, it definitely adds a layer of uncertainty to the whole picture.
Agreed. Okay, one final thing before we move on. The auditor reports, they also shed some light on the company's debt situation. They're disclosing a total financial indebtedness of, hold on to your hats, 96,234.91 INR lakhs.
Whoa, that's a mouthful. How much is that in US dollars?
It's roughly 1.16 billion with a B.
Okay, that's a lot of debt, even for a company doing hundreds of millions in revenue.
Yeah, no kidding. But they do emphasize that there are no outstanding defaults on any loans or debt securities.
Okay, so they're managing it for now.
Right. But still, $1.16 billion in debt, that's a hefty burden to carry. Makes you wonder, how do they get there? What are they using all that money for?
Big questions.
Yeah.
And does this debt jeopardize their future, or is it fueling smart expansion? We need to find out.
Absolutely.
It's a real head-scratcher, isn't it?
Yeah.
We've got strong revenue growth, good EBITDA margins.
All pointing to success, right?
Yeah, you'd think so. But then there's the profit dip and, of course, that mountain of debt. It's a bit of a puzzle.
It is. It's like, on the one hand, taking on debt, I guess it's not always a bad thing, right? I mean, it could help a company grow.
You're absolutely right. It can be a powerful tool. It can help companies like Steel Strips Wheels, invest in new projects, expand their operations. Heck, even acquire other businesses. It's all about strategy.
So you're saying it's like a sign of ambition. They're not afraid to, take risks to reach those big goals.
Exactly. Think of it this way. If you've got a solid business model, a clear path to profitability, taking on some debt to speed things up, well, it can be a pretty smart move.
Okay, I see what you mean. But isn't it also kind of risky? Like, what if things don't go as planned?
That's the flip side, for sure. Debt always comes with a certain level of risk. It can be a real double-edged sword. Because let's say a company's earnings take a hit, interest rates go up, or something unexpected happens.
Like a pandemic or...
Exactly, something totally out of their control. Suddenly, that debt they were carrying, it becomes a much bigger problem.
It's like that feeling when you maybe overspend a little on your credit card.
That's a great analogy. It limits their flexibility, makes them more vulnerable to those kind of economic shocks. So finding that balance is key.
Balance between using debt to grow, but not getting in over your head.
You got it. And to really understand if Steel Strips Wheels is managing that well, we need to take a closer look at the details of their debt. What are the terms? What are the interest rates looking like? When do these loans actually come due?
Okay, yeah, that makes sense. So it's not just the total amount, it's also about all the nitty-gritty details, the fine print.
Precisely. And don't forget about that favorable geopolitical situation they mentioned. That adds another wrinkle to the whole thing.
Wait, really? How does geopolitics tie into their debt?
Well, think about it. If this favorable situation, whatever it may be, if it leads to, say, a big jump in demand for their products, especially overseas.
Their exports go through the roof.
Right. Well, that could boost their revenue, maybe even their profits. And suddenly managing that debt load becomes a lot easier.
Oh, okay. So it could actually help them.
It could. But on the other hand, what if this favorable situation is just a short-term thing?
You mean like a temporary advantage?
Yeah. What if it's all based on, I don't know, disruptions in their competitors' supply chains or something like that? Something that's not going to last forever.
Ooh, I see what you're saying. So if their growth is based on shaky ground, their ability to handle all that debt becomes a lot more uncertain.
You got it. It's like, building a house on sand. No matter how strong the house is, if the foundation is weak, you're in trouble.
Okay, yeah, that's a scary thought. This is getting pretty intense. We've got these big growth plans, a mysterious geopolitical situation.
And a mountain of debt.
A mountain of debt. This is a real financial thriller.
It is. But that's what makes this so interesting, right? It's not black and white. There's a lot of nuance here. And we have to consider all these factors before we can even begin to answer that big question. Is this a good investment or not?
Totally. Okay, and remember those auditor reports? They mentioned the whole CleanMax Astria Private Limited thing, that associate company whose financials weren't reviewed.
Oh, yeah. That's another piece of this puzzle we need to figure out. What's the deal with this associate company? What do they do? How does their performance tie into the bigger picture?
Right. It's almost like a side quest, a little mystery within the larger
A
mystery.
mystery within a mystery.
Love it. We need to find out if it's just a minor detail or if it could have a significant impact on our assessment of Steel Strips wheels.
Agreed. So let's recap everything we've learned so far.
Mhm.
We started with a change in leadership, a new compliance officer stepping in.
Right, and that led us to a discussion about, the potential challenges and implications of that role, especially since the previous person was also the executive director.
Yeah. Then we dug into their financial performance.
Hmm.
We saw some good signs. The revenue growth, those strong EBITDA margins.
Hmm. Those are definitely positives, for sure. But then we've got the dip in profit after tax and the fact that even their profit before tax is down. That's something we got to keep in mind.
Absolutely. We need to understand what's driving those declines. Is it a temporary blip or is it something more serious?
Right. And then there's that whole favorable geopolitical situation they keep hinting at, which could be a big factor, but we need
Mhm.
more information to really assess its impact.
Totally agree. We need more specifics. And of course, we can't forget about that hefty debt burden they're carrying.
Uh-huh.
Over $1 billion.
Yeah, it's a lot. And even though they're currently managing it without any defaults, it's a significant factor to consider.
Without a doubt.
Yeah.
And then, to top it all off, we have that intriguing little side quest, the mystery surrounding their associate company, CleanMax Astria.
With their unaudited financials, it's like a puzzle piece that's just out of reach.
Exactly. But, that's what makes a deep dive so fascinating. It's all about peeling back the layers, uncovering those hidden details, and trying to put it all together.
It's like we've laid out all the pieces of a giant puzzle on the table.
Yeah, and now it's up to our listener to see if they can solve it.
Exactly. Imagine you're thinking about investing in Steel Strips Wheels Ltd. What would you want to know? What else would you want to investigate?
Well, for me, I'd be curious about the competition. Who else is making alloy wheels in India?
Yeah, good point.
How does Steel Strips stack up against those rivals? Are they the market leader? Do they have some, cutting-edge technology that sets them apart? What about their profitability compared to others?
Oh, and remember that favorable geopolitical situation they mentioned. I definitely want to dig into that.
Yeah, what's the story there? We need details. Is it something that's going to benefit them long term, or is it just a temporary thing?
Good flash in the pan.
Right. And of course, we can't forget about CleanMax Astria, that associate company, the one with the unaudited financials. That whole situation is a bit of a mystery, right?
Yeah, it is. Who are they? What do they do? And how does their performance actually affect the bigger picture for Steel Strips wheels?
It's like a puzzle within a puzzle.
Totally. And that's what's so exciting about investing, right? It's like detective work. You gather all these clues, piece them together, try to make sense of it all.
And sometimes the most important clues are the ones that are missing.
Oh, good point.
It's about asking the right questions, digging deeper, and not being afraid to challenge assumptions.
I like that. Challenge assumptions. Well, we've definitely uncovered a lot about Steel Strips Wheels Ltd. today. They're ambitious, they're growing, they're operating in a really complex global environment.
Yeah, they're not afraid of a challenge, that's for sure.
But as with any investment, there are always risks. We've seen some potential red flags, some things that need further investigation.
Absolutely. We've highlighted those areas where, you'd want to do some extra homework before making any decisions.
So, to our listeners, we leave you with this. We've given you the pieces of the puzzle. Now it's your turn to put them together.
Do your research, draw your own conclusions, and become a smarter, more confident investor.
And most importantly, keep diving deep.
That's the key.
There's always more to learn.